Hi there and welcome to yet another edition of Who Moved the Market. It's Tuesday and it's raining gains on the street. Lots of green on the Nifty and it's a huge large cap rally today. One particular stock is really leading this charge from the front. It is the day's biggest Nifty gainer and I'm talking about Bajaj Finance. Abhishek makes a comeback on the show 2 days running. Yesterday we were discussing HDFC and HDFC Bank. Today it's Bajaj Finance, but it's that kind of a market. Financials are really taking control of leadership. So Abhishek, now you tell us, I know that there is a first quarter update that's come in and I guess that's what's really cheering the street on Bajaj Finance. What's happened? You know, these numbers look strong.
Super strong. To be honest, the numbers are very strong. Any Q1, they have not seen a growth more than 20% in the new loans. So this is perhaps the all-time high in terms of a Q1 growth rate on a sequential basis at 30.8%, perhaps a super strong quarter for them. Now there was a concern with street that Bajaj Finance was slowing down and the cross-sell rates were reducing, so they might be losing market to banks because banks have attractive rates than an NBFC. But that concern has evaporated in Q1 given the fact that the new loans are up 34% YOY and close to 31% quarter on quarter. You have not seen this kind of a Q1 loan growth on a sequential basis at least in last 7-8 years or even more, and that is the kind of business momentum that they have had.
It's, exactly, it's difficult to digest that, that 30%, 31% number that Abhishek is saying, that's quarter on quarter growth. That's over the March quarter, the next 3 months, April, May, June, we're talking about over 30% growth in loans. So that's on the loan growth. What about the size of the book itself, the assets under management? How is that?
It is not the loan growth, just to correct, it is the new loans. New loans that have come up. So people have taken more loans from Bajaj Finance and that's a surprising fact given that Q4 is seasonally a weak quarter for them. Every Q4 you will see a decline in their new loans versus Q3 because Q3 festive season, that is the best period for them in terms of growth. So now the AUM growth on the back of new loans being so strong is perhaps at a multi-quarter high of multi-year high. Let me just explain. On a year-on-year basis, the AUM growth is about 32.4%. That is the best in last 14 quarters. And sequentially, that is quarter on quarter, the AUM growth is at 9.2%, which is one of the best that you are seeing in last 16 quarters or let's say 4 years. So perhaps a 3.5 year high in terms of YOY growth. It's a huge base. It's not a small base. On a 2 lakh crore book, if you are growing at 32-33%, it's a very robust growth over there. And sequentially as well, a 9% growth, typically the growth in Q1 over Q4 has been around 5 to 7% kind of a range. More than 9% growth has actually cheered the street today.
Oh, absolutely. Because this is phenomenal. I remember the debate around Bajaj Finance was whether they can keep growing at 30% on such a huge base. If this quarter is anything to go by, they've shown that they can, and that's why the street is really saluting these numbers. But some more details, Abhishek, where would you imagine, of course we'll know more from the management once the actual results come in, but where would have this growth come in from? Is it just bigger size loans or is it more people that they're lending to? Which could be the segments?
Well, Customer acquisition has been pretty strong, growing at 21% YOY and more than 5.5% sequentially. So back of the envelope, I calculated the average ticket size that they might have had in this quarter. It shows a growth of about 9.4% YOY and about 3 to 4% on a sequential basis. So not much growth coming in from ticket size. The cross-sell rate, that's improved. So sticking with the company, a customer, that rate has improved. The customer has taken another loan after finishing his previous loan. Now that cross sell is actually improving, or their ability to give more products to the same customer. So in that segment, or the same customer taking another loan, that's been sticky. Talking about AUM growth, if I check Q4 and Q3's numbers, they have majorly gained from consumer, SME and commercial as well. only last quarter, that is in Q4, the LAS and IPO financing was pretty robust. This time around, we have seen a couple of capital raise that's come in.
New listings have happened.
So you can expect a bit of strong momentum in again that loan against security and IPO financing that they have done. Otherwise, consumer, SME, commercial have been pretty strong. Rural market also we are hearing has been pretty strong. So it's like across products that there might have been strong growth. Bajaj Finance typically doesn't focus on one segment alone. They have a good breakup of their different verticals of financing, and in my view, looking at last 2 quarters number and this quarter's total AUM growth, it might have been across all their segments.
Got it. But as you're pointing out that it's also, both engines are firing. As you mentioned, the cross-sell rates are better, which means they're able to sell more loans, newer loans to existing customers, plus they're getting new customers as well. So there is an increase on both counts. So that looks good. I just want to talk about deposits. If I'm looking at the right number, they have managed to grow deposits by 46% over last year. That's massive, isn't it?
Well, that's the faith that people are having in Bajaj Finance. And in a rising interest rate scenario, you would obviously park more money with banks, as they offer, banks or NBFCs for that matter. You will park more money because you get better rates than putting it in a saving account. So that's a key point. And getting deposit, let's speak from NBFC point of view, is a source of raw material, you can say. So getting raw material to be able to give finished product, that is loan, it obviously is very good. So their deposits have grown by 46.3% YOY and about 12% sequentially. That is a very good part. Now going ahead, from the liability side perspective, there is a huge vacuum that's been created because HDFC Limited is out of the market. HDFC Limited is or was a AAA rated entity. There are very few NBFCs or HFCs who are actually AAA rated. So Bajaj Finance falls into that category. It's a AAA rated entity. So people who are used to lending to AAA rated entities, they'll obviously be able to give more money,
more funds freed up.
More funds that has been freed up for Bajaj Finance because the vacuum has been created due to HDFC Limited moving out and merging with HDFC Bank.
That's a very interesting point. I didn't think of it from that perspective, but it's great that you brought it up. That now that we don't have the standalone HDFC, whether it was retail depositors that were parking their funds with HDFC, or if they were in the in the money markets to raise funds, HDFC isn't there, and I don't know. I don't know how much money, but I'm guessing it's a huge amount of money that HDFC must have been raising, right?
Yes.
So suddenly all that cash is freed up?
We don't know the exact quantum, but it could be a good quantum that's actually freed up for all the NBFCs and HFCs.
The top rated ones.
Especially the top, but there are only a handful of them who are top rated, or let's say AAA rated, like Canfin Homes or Bajaj Finance. You can hardly now remember who are the AAA rated. So that's a kind of number that's fallen from like what it was 10 years ago.
Okay, so there we have it. That's an interesting point to keep in mind. That going forward, Bajaj Finance's ability, at least just in terms of sheer liquidity available, might be a little higher in the absence of HDFC. What else, Abhishek? We will hear from the management, we'll watch out for the commentary. But looking at the past 2-3 quarters, the way the business has shaped up, what else should people watch out for in terms of business trends going ahead?
See, the strength is that the loan growth this time has been pretty strong. But will this continue? You need to watch out. Sustainability of this loan growth needs to be seen. Whether they can sustain a 9% quarter-on-quarter growth, grow at above 35% for the year, because the management has been cautious. They have said that we will grow at 28 to 29, or let's say about 25 to 30% is the broad range that they have given for their AUM growth.
Okay.
Yes, for their AUM growth. So let's not extrapolate 9% plus this quarter's growth into 36% for the year. So there will be 1 or 2 quarters where the loan growth on a sequential basis might not be at 9%. So how long can they remain aggressive? Now, growing the balance sheet is a daunting task. It's not an easy task that an NBFC with 2 lakh crore plus kind of a balance sheet, you grow at 30% or 25%. Let's see how they manage that. And the other good part that is turning around for NBFC HFCs is that, you know, liability cost has already played out. Now the yields will play out. So if they raise rates, the yields will actually benefit them on the net interest margin front. Yield has benefited banks so far in the net interest margin front over, you know, May to March of this year. May of last year to March of this year, the net interest margin of banks have been phenomenally growing, given the fact that yields were improving. And net interest margin of NBFCs, HFCs were under pressure because for them the cost of funds was growing. Now they will start raising the rates on their yield or their book, on their loans, and that will actually benefit them on the net interest margin. So we need to see how and you know, how much will the net interest margin improve for NBFCs, and that in return will benefit the return ratios improvement, because the worst of asset quality for all the lenders is behind.
Okay, so we probably are in you know, favorable scenarios with respect to asset quality, and as you know, Abhishek explains, because this repricing of loans perhaps happened a little later for NBFCs compared to banks. Maybe we'll see some margin headwinds, margin tailwinds as well. But Abhishek, one more thing. I mean, there's been some chatter on the street about the possibility of some sort of a management change at Bajaj Finance. You know, is this something that people are really expecting this year?
Well, you know, they have had few people at the top, and I've been speaking to analyst community as well as some investors. The sense that I've got is one of the top guy has told a few investors or analysts that he may take up a non-executive role. So they are already hiring a new team, couple of them, training them, so that whenever this happens or this transition happens, as and when they feel the need for this transition to happen, people are ready, employees are ready, management is ready, and they are ready to go. But you know, such pedigree, can you see that coming back is a question.
Usually when companies of this league, the scale size, I mean, they continuity in management, continuity in terms of processes is the hallmark of, you know,
those who build it from scratch, like of Mr. Deepak Parekh or Mr. KK Mistry, who have built the company from day one. I mean, you have to give it to them for what institutions they build.
Oh, absolutely. And by the way, I mean, in this space, there is going to be a challenger, and that's this year itself. Jio Financial Services launches. The expectation is sometime in September, October, and perhaps we start getting some more inputs on how they are going to shake up the sector. So it promises to be a very, very interesting second half for these large NBFC giants. Just very quickly, word on the street. What's the buzz after such a strong first quarter show?
You know, CLSA has actually upgraded their rating to buy from outperformance. They were the first one to get it on the sell side also. I mean, sell rating. They got it correct. Their target price also came. And since then, they have been increasing the target price as well, which is actually being seen now also. So their earlier target price was 6,600. That's been increased to about 9,000 per share. And they say that the company is in a sweet spot, given the fact that the loan growth has beaten estimates and valuations offers upside. So AUM growth came in at 9% quarter on quarter. Their own estimate was about 6 to 7% quarter on quarter. The extraordinary growth for NBFC of this size is actually massive, and new customer acquisition, as I have been highlighting, was very healthy. So they have raised their EPS estimate by 5 to 6%, and the PAT CAGR that they see over the next 2 to 3 years is anywhere around 25%, which means that the ROE of Bajaj Finance could be around 23 to 24%.
Okay, target price you said 9,000 rupees.
9,000.
All right, there you have it, all about Bajaj Finance and why the stock is rallying 7% to 8% today. Lots of expectations in the market that this is just, you know, a sign of things to come in terms of growth for the business this year. Abhishek, thank you very much. Very, very helpful explanation coming in over there.
Welcome.
We hope you found it enlightening and, you know, you found it of good value. We'll take your leave on that note, but do keep it with us. Remember, every day at around 2 o'clock, we are live with you on YouTube with more themes from the market. So see you tomorrow.